Pete McGuire is live in our Sydney CBD studio from XM.com. Pete, welcome. They've cut output 900,000 barrels a day in January. Is that what they said they would do?
Well, good afternoon, Carson. Yes, we're 1 month in, and that month's gone very, very quickly. Around about right on target. As far as the compliance team are concerned, everyone's very happy with these numbers. And rolling forward, naturally, we're building up to that 1.7, 1.8 million headline number. So that will should be there sometime in February, early March.
Do we know much about this compliance team? I mean, we know who they're calling themselves, but I mean, do we believe? Did we ever believe that you can monitor compliance of this magnitude?
Well, that's a very difficult task. I mean, financial services are ring-fenced by compliance teams, and of course, something as diverse as this, there are numbers to produce, and naturally, they've got a core team of 5 that are critically examining what those numbers are. They're going into all forms and fashions, and as far as they're concerned, the OPEC team, they're over the moon, and they're very, very satisfied with what's been achieved.
So the story of 2017, as is being cast right now, is one of what? A return to balance by what, within the next 6-8 months?
Well, exactly right, because this cut, Carson, is only for the first 6 months, and they believe that they will have achieved that number, the 300 million overhang. That will be eaten up at 1.8 million barrels a day. So by 30 June, there's every chance that they won't need to renew this cut. We'll keep these cuts going. And in turn, I think it's going to be game on after 1st of July.
They have heard of Donald Trump. They have got Donald Trump's idea on what he thinks of gas and oil. What do they think about their response to Donald's response?
Well, I think there are many issues at play, Mark. First off, you've got the border tax. That could be imposed. That's going to greatly impact crude prices. WTI could rally very, very strongly. Secondly, of course, what happens with those large producers? We've got major issues at the moment as far as sour crude or heavy crude, because that's the only crude that's being cut, so it's becoming very valuable. We've got the hedge funds rolling all over this with long-dated options and futures. They're seeing the potential they could see a very large price spike. So that in turn has got many speculators all over the market. So it's a very interesting trade. Over the last couple of weeks, this has become very, very evident.
Now, just put that into context as well. The hedge fund component that had been building and that now presents itself as we get a return to normal activity levels. You know, we've come away from, you know, a relative period of calm. Are we seeing those trades have been tweaked? Have they?
Well, significantly increased, Carson, doubled in actual fact since October as far as long positions. So that's really creating a lot of hubris in the market. Secondly, the ratio from in November from Brent to WTI was running at about 1.67 to 1. Now it's narrowed completely down to 1.13 to 1. So I think it'll only be a matter of time. It'll be nearly, zero-sum game. It'll be, 1 for 1. And I think that there's a lot of push at the moment for that WTI trade.
There's a lot of push, but is there a lot of put action as well in the market in terms of option trading to cushion your downside if there was to be a big move away from that trade that you've just talked about?
Well, if there were, as you know, I mean, these guys, money managers and hedge funds, they've really gone long on the futures, long on calls, naturally. There'd be hedging positions, but more importantly, they can exit quickly if they need to. So at the present time, they've got momentum building into these trades and very long-dated futures and options contracts. For the viewers' sake, they could be out a couple of years. So you're talking 17, late 17, 18 and 19 pricing. And that's all the ingredients that are going into this trade, and they're really, stacking their positions, Carson.
Oil's doing well, but what about gold? I mean, we're seeing some of our gold stocks starting to move. Macquarie uplifting their price target on Newcrest today. What's your thoughts?
Well, I tell you what, Adam, it's back at 1,200. It got sold off a little bit. It's been all over the shop since really the mid of January, that is. It's been quite volatile. We had 1,240, well, just under. Back down to about that 1170 odd. Now it's back at 1,200. You've got the Chinese New Year, so there won't be a lot of volume coming out of that region. And naturally, the volatility with the US dollar, it's a tweet-by-tweet proposition. So who knows? We're only Monday in the States. Let's see what happens as far as Tuesday, Wednesday, Thursday and Friday, what the president's prepared to do. And we could see further volatility in US dollar, which in turn will play directly into gold price.
I thought Macquarie was downgraded to neutral from, Newcrest by Macquarie, downgrading it to neutral.
They lifted their price target.
Fair enough. They're saying it lacks material upside to the $23 PT, so they cut their recommendation to neutral,
right,
despite what was a solid report. So that's the point, isn't it? Where are these material upside catalysts to lift you above what is, after all, NCM at the moment is trading just on 21.53, so there's not a huge amount of upside to take you to $23.
But if obviously gold starts to run, then forecasts start to move as well. So
yes, catching run.
What are your thoughts on gold? How do you guys see it going?
Well, we've been playing evolution. I think is a better play. But Newcrest obviously the lowest cost producer out there, so it's still very good quality. But
a strong US dollar backdrop to this is what the inevitable prediction is. Now, on that basis, how can you hold long positions?
Too much, yeah. Oh, look, I think it's right. Tweet by tweet basis, it can turn very, very quickly.
And are clients, basically girded for that type of daily volatility?
Volatility, the traders are definitely.
Yeah,
definitely.
Versus clients who are
the retails.
Bottom drawer plastic fruit type.
Well, they're largely liquid, and it just gives very easy access to those markets. Traded 24 hours a day. It's just, I wouldn't be surprised to see strong volume upticks going forward into February.
It's the old days of having the Bloomy monitor at the end of the bed, isn't it?
Yeah, exactly right. And, and technology, Carson, I mean, when you look at it, this truly is a 24/5 market.
Wow.
Opens in Auckland on a Monday morning, shuts in Saturday morning in New York, and there's a lot of activity over that 5-day period.
Yeah.
And I think that you're going to see a lot of very interesting trading opportunities come that February and March because there is so much uncertainty. Have a look at the German numbers coming forward as far as inflation. Have a look what we're doing as far as Yellen, what's going on with Trump, where does the Fed sit in all of this, and more importantly, where's Brexit? And keep an eye, and I've got to tell you, keep an eye on what's happening in Greece because I think we're going to see some fireworks sometime this month.
We always expect them, though, don't we? Aren't they in the calendar that we will arrive at that monthly moment and we'll all be sort of doing?
But doesn't it come down to
Hail Marys?
the mood of the market at the time of the fireworks?
Yeah, well, there'll be fireworks in February, I think, in Greece because they've got to deliver and there's certain issues there. And then the uncertainty, how that plays across the fabric as far as Eurozone and elections leading forward. So we understand where Germany's position, Netherlands and so on. So I think it's going to be a rough and ready ride for 2017.
It's almost self-fulfilling, though, because all of the tourism that then spawned by the media converging on Athens is actually a net positive, right? I mean, for that moment in time, they are adding to the store of growth.
Don't pay. You don't use the nice hotels. You don't pay.
Well, I don't
just congregate at the front. You don't do anything.
We've got to sleep
Maybe
somewhere.
Buy a
We've got to sleep with the mangy dogs
Sense.
in Santagma Square. I mean,
okay,
some do.
You're one of the few.
Well, believe it or not, I think others do as well. Anyway, Peter, thank you so much. Talk to you soon. Pete McGuire from XM.com. Short break, and we've